Hi, everybody. We are going to be talking about Airbnb today, which is one of my favorite stocks to cover. It's down significantly from its recent highs, and I thought it was worth a closer look. Before we dive into Airbnb, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work we're doing on YouTube. Again, fool.com/Frankel. So I'm going to go ahead and share my screen. We'll talk about Airbnb for a little while. There we go. So Airbnb, if you're not familiar, the stock is down significantly. It's down by 24% from its recent high. Um, it, over 5 million hosts list over 8 million properties on Airbnb now. It is a very successful business. And the recent results have been strong, but worries about consumer demand have really been weighing on the stock. So here's just kind of a recap of how it's been doing in its recent quarter. In the fourth quarter of 2024, Airbnb grew its revenue by 12% year over year. Not fantastic, but given the pressure that has been on consumers, consumer spending has been under pressure for a little while now. So that is a really tough comp to look at the year over year numbers. So 12% is still a pretty solid growth rate considering that. Their gross booking value grew by 15%. Margins look fantastic, a 36% adjusted EBITDA margin, 24% net profit margin. The business generated $4.5 billion of free cash flow in 2024. Here's just the numbers from their shareholder letter. So this is what I mentioned: 12% year over year revenue growth right there. So here's their net margin: 24% net margin for the year, 36% adjusted EBITDA margin. So that's very solid, and $4.5 billion of free cash flow, a 40% free cash flow margin for the year. That's for the full year of 2024. So the business is making money. It's doing well. Gross booking value, almost $82 billion of nights and experiences were booked on Airbnb's platform. That is 12% year over year growth. So if you look at that on an individual basis, that's over 490 million individual nights were booked on Airbnb. This business has certainly come a long way from the beginning when it was started as a few air mattresses in an apartment, which is where the name comes from, by the way. You can see the profitability here. This is just free cash flow. And it's not that the 40% free cash flow margin was like a fluke or anything like that. This is pretty consistent. 41% in the fourth quarter of 2022, then 39%, then 40%. And you can see the growth in free cash flow over the years. So really impressive profitability and growth right there. And there is a big opportunity to be had from here. You might think because of how big Airbnb is that it's just a mature business at this point, but that's really not necessarily the case. The vacation rental industry is very big. I mentioned there was about $80 billion of bookings on Airbnb. The vacation rental industry, this is just short-term stays, which is just one thing that they do, is expected to reach $342 billion by 2033. If Airbnb just stays as dominant as it is, this is going to roughly triple its business. That's roughly 3 times the size of the vacation rental industry today. So if it keeps its just dominant presence, it will triple its business by 2033. So that's 8 years from now. The company has estimated its total addressable market at $3.4 trillion. As I mentioned, short-term stays are just one thing that Airbnb does. It's also in the long-term stays market, which was honestly a really big part of its business during COVID, when people would, just they were forced to work from home, so they would work from somewhere else for a month, 2 months. But long-term stays are still a big part of Airbnb's business. They're trying to figure out more ways to make that a bigger part of their business. And experiences. And by the way, when Airbnb says experiences, this might be like, okay, you rent a house in Orlando, Florida. They might sell you a day pass to one of the theme parks there. Or if you book a waterfront house in the Florida Keys, they might sell you a snorkeling trip. Or those would be experiences, kind of like adjacent things that make sense, could be complements to your stay. So with all those things, they think they have a $3.4 trillion addressable market. There are other adjacent revenue streams that have been added and could be added. You see right there, they added guest travel insurance in 2022 and have really done a great job of scaling that business up. There's a ton of international potential here. Airbnb is in over 220 countries around the world, but the most of its revenue comes from just 5 of those. So it does have a pretty big opportunity to scale into some of its markets it's already in. So that's something else to keep an eye on. The company is in fantastic financial shape. It has $10.6 billion of cash and equivalents on its balance sheet. Another thing Airbnb does to make money, they hold money on behalf of guests. So if I book a property on Airbnb, I give a deposit. Then when I actually stay, the people who own the home get the money. In the meantime, Airbnb is holding that money and earning interest on it. And in a high interest environment like the one we're in now, that's actually a pretty substantial revenue stream. If at any given time it has $5 to $6 billion of customer cash on its that it's not its own money, but it's generating interest income on that. The company is buying back stock pretty aggressively right now, which tells me that management thinks it's cheap. The company's diluted share count is down by 7% in just 2 years. So this is the current outstanding share count is the big number on the bottom right here. You can see these. So that's dropped a little bit, but the stock-based awards warrants that are still outstanding, that adds to the fully diluted share count. So as people exercise those awards and warrants and things like that, the buybacks have helped to offset that dilution and then some. You can see the fully diluted share count was 694 million 2 years ago. Now it's 658 million. So if that could continue, and I don't see any reason why it won't. There's still over $3 billion of buybacks authorized right now, and that could just be a starting point. So to sum it up, Airbnb is not a cheap stock. It trades for about 32 times earnings right now, but this is a massively profitable business. It has a dominant market share, and it has very impressive growth and growth potential. Right now, my thought is that it's trading at a kind of depressed price because of recession fears, consumer spending fears, and things like that. If the U.S. can avoid a bad recession, Airbnb could be a very nice bargain right now if you're a long-term investor. So I'm taking a very close look at Airbnb right now. It is not in my portfolio yet, but it could be very, very shortly. Let me go ahead and stop my share. So I'd love to know what you think. Please leave me any comments or questions you might have. I'll do my best to answer them individually. And please take a minute and stay tuned for a message from The Motley Fool. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.